Looking for somewhere to copy trade that doesn't limit you to one exchange? Diabolo is that platform. Diabolo extends its activities to various markets and offers development kits for anyone to create unique copy trading interfaces. Their IDO starts January 26th on Pools.finance, so don't miss the opportunity to acquire their Dcash token, which gives you free discounts, rewards, and even NFT minting rights. Visit Diabolo.io for more information on participating in their open beta, and visit Pools.finance for their initial DEX offering. Link in the description below.
This my two Satoshis. This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah.
It's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. And in today's episode, we are going to look at Cryptodamus striking again. That's my AKA, my alter ego. Cryptodamus looks like the Diem project, or used to be called Libra. Guys, remember that? The Facebook coin. Well, that looks like it's about to be done data, not happening anymore. I said this was not going to happen in its form when it first came out with this white paper. I did a video the same day it came out, and I'll go back and find that video so you guys can see my analysis on the Libra, or rebranded to Diem, a year and a half ago. I knew this project would not work because it would still demand away from the US dollar, and no government is going to go for that. They're just simply not. So we'll take a look at what's happening. It's going to be winding down. This Facebook coin no longer to be in existence, or even try to be. They never made it to actual product. The company associated with the project, actually stock went down, got hammered. We'll look at all that today, but the bulk of today's video is going to be talking about what happened to Bitcoin and the cryptos yesterday after the Fed's announcement. I asked on Twitter yesterday, what did you guys think was going to happen? Most of you in crypto Twitter, of course, have a bias toward cryptos, and 50% of you said that the markets would pop. Well, you're kind of right. You were 50% right, but it popped and then dropped. And so we'll take a look at what happened in today's episode, and I'll explain to you how you should play this with your crypto portfolio going forward. The first rate hike looks like to be in March. And if you want to look at internal data that's inward looking in the crypto markets, we can take a look at what the derivatives data is suggesting about this price and where we are with things. Not looking good either when it comes to Bitcoin heading higher in the short run. And lastly, I'm going to take a look at this chart from the Federal Reserve Economic Data website. It's all about consumer price indexes. Now, we know that they really toy with the index and change out components that make up the index, but this chart still gives you a stark look at inflation, okay, and the cost of living for your everyday individual. I'm going to explain how this all plays into what we are talking about today as far as Bitcoin's fate in the near term. I think ultimately long term, Bitcoin and some of your cryptos will do very well in this environment. I'll explain why in today's episode. All three topics coming up on today's episode of My Two Satoshis. Let's get it. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And before getting started, of course, heat map first, then everything else. Bitcoin down 2.7% today, making a move back down. We'll look at the charts here in a second. Ethereum down 5.6%. Ouch. Look at Solana down 6.3%, trading below that $90 handle. Luna, ADA, Doge, I mean, all these coins are getting hit hard as we start to digest what happened yesterday. There was a knee-jerk reaction up, then we headed down. That's typically how the markets like to do. We saw that happen, and I'll bring this chart up right now. We saw that happen with the initial Fed announcement in December last month. It took a few days for it to digest, but we saw an initial Fed pump, then a fade on that pump, and ultimately we tried to head back up one more time before getting smacked back down. And that was the double or triple top event on the hour chart that really set the tone and the direction of cryptos here since then. Now we're deep into that channel that was formed back in May of last year, and so we're not, from a technical standpoint and fundamental, this is why I'm a little bit more concerned here, ladies and gentlemen, because there are technical and fundamental signals that are showing me that we head lower, and you should be very cautious here. But before we get into Bitcoin and the strategy I would take, I do want to go back over a Cryptodamus hit. Yes, Meta, or or Facebook reportedly abandons the Diem stable project after intense government opposition. Crypto Blood told you guys this a year and a half ago. On the day the white paper dropped, actually, I need some people to definitely back me up in the comments if they remember this video and my analysis on this project. But this says here from Beth Williams, just in on the terminal, Meta-backed Diem is said to seek buyer after coin plans dashed. Who's gonna buy this? Jack Dorsey here throwing little jabs with a response from the article in Bloomberg, and he says here, Carp Diem. That's crazy. The news also has hammered the shares of Silvergate. That's the company that was part of this whole ordeal. This company was supposed to actually issue the stablecoin before being bogged down in resistance from regulators. So look at this stock here, a gap down when the news occurred. Not a good sign there. And you guys probably remember that the first issue or telltale sign that there was some issues with this project was the renaming or rebranding of the project from Libra to this Diem. Those people over there at Facebook get paid, the execs, C-suite individuals, they get paid a lot of money, and you would think they would understand, and it just shows that they don't. These individuals don't understand the powers at play here and who really controls the narrative and the power. It's the monetary system, it's the Federal Reserve, it's the Treasury. They're not going to allow a private company, private, really public, but you know what I mean, like in the private sector, to come in and create a coin that is currency, especially when you have a company like Facebook who has over 2 billion users, maybe not all active, but that still had a lot of people that they could target or market this new currency to, and that would be a direct threat towards the US dollar. Could be even overnight. So I knew immediately that this was not going to be something that would fly under the radar, and you know, the central banks wouldn't like it. They of course accused Facebook of trying to usurp their control over the money supply, and that's exactly what I stated when I read the white paper a year and some change ago. Even though some thought that the Facebook coin would be co-opted and just become the Fed coin, I didn't think that would happen. But the final blow to this project really came from the Federal Reserve when they said that in May that an affiliate of the firm Silvergate Bank was to be the issuer of the Diem USD stablecoin, a type of cryptocurrency pegged to the US dollar that's typically used to buy and sell other cryptocurrencies. So if you guys recall, initially in the white paper, they said that they wanted their own coin. Okay, not any relation to any stable coins, any fiat currencies. And when they got a lot of pushback from that, which is natural, right? You have an audience of 2 billion people. The governments are not going to allow you to just issue a currency, your own currency. Not going to happen. So then they pivoted. They pivoted to saying, hey, okay, well, if we can't issue our own, we'll make this Diem or Libra coin at that time a basket of cryptocurrencies and weight it in a way where, you know, US has most of the weight that makes up that coin, with other countries like the Euro and even the Chinese yuan was in there. That didn't fly either, because let me explain something to you. The central banks here in the United States and the Federal Reserve and Treasury, they don't want any competition. So splitting that didn't really, it was a step in the right direction, but ultimately what they would have wanted was a coin that was backed by the US dollar. And I don't know what happened behind closed doors that made them even deny that or give this company so much flack on even doing just a straight USD stable coin. This company that was going to issue it, Silvergate Bank, said without the green light from the bank's regulator, Silvergate was left unable to issue the new asset with confidence. And I'm gonna be honest with you, I think the Fed will step in, and they're telegraphing it that they will be working on their own CBDC. However, I think they'll be last to the actual table, okay, or last to complete the race when it comes to CBDCs, simply because a CBDC for the world reserve currency is more difficult than any other currency implementing a CBDC, like the Chinese yuan, right? It's easier for them to do that. With the United States, issuing a CBDC would literally take out the banking system, and there would no longer be a need for your traditional regional and national banks. And you know, that's not going to happen. So I'm interested to see how this all plays out and what the final CBDC looks like, central bank digital currency looks like in the United States, because they can't have their cake and eat it too. You can't issue it, right, and then make the banks be a relevant player in this, because now the Treasury can issue this CBDC directly from their department and issue it directly to the end user, the citizen, eliminating the banking system in most cases. And so I don't know how that looks. That's a big disruption, and we'll have to see how that all plays out. But I needed to highlight this Cryptodamus hit, yet another one in the books for me. But moving on to the next subject that many of you came to hear is about this Bitcoin and Federal Reserve and their minutes and what they said yesterday and how that all plays into your crypto portfolio. Well, yesterday I put out this tweet. Today is a big day for the markets, cryptos and stocks alike. The FOMC meeting update. Let's see what happens. Will markets pop or drop? Half of you said pop, followed by 34% of you said drop, and then 15% of you guys said stop. I don't even know if you knew what I meant by stop, but stop essentially means no change or no type of effect on the markets. And ironically, though those who selected drop are more right, because that's the actual direction we're heading in the market, we're dropping. The initial knee-jerk reaction was a pop in the markets. That's typical in markets. They want to wash out everyone who was right, being short, wash them out, and then head in the opposite direction. But yeah, Bitcoin slumps following that confirmation, as this article from News BTC talks about. And it is because in their statement, Powell stated that the central banks would progressively eliminate economic support as a means of combating excessive inflation. And what the Fed is doing, ladies and gentlemen, is winding down their asset purchasing program and what's also called a taper. They're winding that down. So less liquidity in the markets because things are starting to heat up. I'll show you a chart here in a second from the Fed that shows the consumer price index heading higher. And I'm going to zoom in on this chart because there's some telling things that you should see. But that's what's happening. The market is literally forcing their hand, and they have to start tapering because we don't want to see inflation get out of hand. So they got to try to jump ahead of the direction that we're going. I think it printed a 7 handle last month. The CPI, they have to get ahead of this. They don't want inflation to get out of control. And so they have to stop printing all this easy money. Guess what? I've said this many times and I sound like a broken record, but Bitcoin is a risk on asset, meaning when people feel good about the markets and the economy, they're going to buy Bitcoin. They're going to buy stocks. They're going to buy real estate. But when things start to slow down or there's uncertainty, Bitcoin and stocks and all that are not going to do well because they are risk on assets. So people are going to go risk off, meaning go to cash, maybe go to bonds and more traditional, less volatile assets and wait it out, move to the side. They call it dry powder. So people are going to accumulate dry powder and assess things, then jump back into the market at a later date. But that means that Bitcoin and the crypto markets are going to continually take a tumble. Overall, you may have some pops here and there, but until the Fed changes their tune, we are heading lower. I said that the other day as well in a tweet. In response to someone asked me, was the bottom in on January 25th? I said, no, I wouldn't say it is saying anything. Unfortunately, the bottom is in when the Federal Reserve reverses its decision to taper. It's literally that simple. And it is. It is that simple. And that's all really you have to do at this point, ladies and gentlemen. Figure out and watch when the Fed decides to capitulate and tap out and say enough is enough. I can't allow the markets to head lower any further because, one of their main mandates, they have a dual mandate. One of them is full employment. So as the stock market starts to drop, people will become less confident. And that's when businesses start laying off people. That it's a self-fulfilling prophecy. Even though the stock market isn't the economy in this bizarro world, it actually has become the economy instead of the economy being the stock market. A reflection of the stock market is the other way around because we're so perverted in our monetary and fiscal policy. It really has messed up everything. So that's all you have to do at this point. Watch the Fed, and then that will determine what Bitcoin and the crypto markets are doing. To extend it even further, the equity markets as well. And before I show you this Fred data chart, I want to show you some things internally that you can watch. This is out of actually Cointelegraph, and they talk about derivatives data suggesting that Bitcoin's $39,000 pop that we saw a few days ago, people were getting all excited about that, but that price flash, a bullish signal, not really. I didn't think so. I thought it was a dead cat bounce. I thought it was a bull trap, and this shows here, the derivatives data show that bears are in control of January's $2.3 billion monthly options expiry. Because more importantly, this is what you need to know about what's going on in the options market. Even if you're not aware of that market or not that much of an advanced trader, you have to understand that if Bitcoin trades below $38,000 by tomorrow, really, that's the end of the month, that last Friday when options expire, the bears are set to profit about $350 million. So that's what's on the line. That's the line in the sand. We're currently like $3,000 away from that line. I really don't, seeing where we are right now, anything's possible, right? But seeing the formation of these candles, I do not see us going the opposite direction, almost $3,000, $2,000. Now we could see a pop to really wash out all those shorts, but I don't know. I don't see it happen. Let me know in the comments below. Do you think that we will see a pop above $38,000 before tomorrow's expiration? If we do see expiration between $39,000 and $41,000 Bitcoin, the net results do favor the bears by $180 million. But yeah, we'll see what happens. I'm looking at it from more of a macro standpoint. I am still bearish on cryptos until the Fed changes their mind. I'm telling you guys. But what I want to show you, last piece of information I want to show you for today's video, is the Consumer Price Index, CPI, for all urban consumers. This is interesting because as you see, I'm going to try to zoom in a little bit here. What happened here in 1971? Many of you know we came off the gold standard right in here, and that's really when we started to see an acceleration of this CPI number. And basically that's just the start of a lot of debt, a lot of piling on of debt, and us decoupling from the gold standard, or the little piece of gold standard we still had. What's interesting is, I'll zoom into the 5 years. You guys can see here, this is when coronavirus started, essentially February, January 2020. I did my first video in February 2020 about the coronavirus and covering it and showing you I was getting masks and all these P100 masks, N95. But what we saw here was the biggest amount of money pushed into the system directly that we've ever seen. Look at the CPI just take off. Now, if I zoom back out to 10 years, you can see the deviation in the path, right? It's been kind of a linear move up. But when Corona hit, we took a slight dip and boom, we went crazy. The dip was literally just because we saw the full global economy screech to a halt, right? But then the stimulus came right behind that, and we were off to the races. As you guys can see here, this is what the Fed is worried about. This CPI is starting to get out of control, and so they have to start tapering the money printing. But again, I feel like once there's enough blood in the streets, that to the point where it affects the employment or full employment, they're going to reverse course. But again, the question is, at what price? Is Bitcoin at $15,000, $10,000, $20,000 Dow Jones? Where is it? What's the point where the Fed capitulates and they reverse course? It's no time soon, that's for sure. So keep that in mind. That's what I've been trying to explain to you guys. That's the thesis behind my rationale. Yes, the Fed will reverse course and we'll start money printing again. It's just about at what point. Think about that. Let me know your thoughts in the comments below. I would love to hear. And make sure you guys, if you found this video informative, you definitely want to like, share, and subscribe. Share this video. More people need to hear about this type of stuff, the other side of looking at the crypto markets, not your Hunter X and these faces and all that. This is what's going to actually help you in the future and protect your portfolio. But that's pretty much it, though. It's your boy Crypto Blood. Again, make sure you guys like, share, and subscribe. And that's my 2 Satoshis. I'm out of here. Holla.